Welcome to Channeling Stocks, and thank you for the opportunity to share this theory with you. During the next few minutes, we are going to go over some of the basics involved with channeling stocks, what they are, and how they may work for you. Take a look at the symbol BID from October 21, 2008 through December 26, 2008. Based on the past price movement, where would you think the stock price is going to go next? Let's take a look. Here is the same stock just 10 days later when it closed on January 5, 2009. If you said you thought the stock was going to go back up, you were correct. You now understand the very basic tenet of channeling stocks. A channeling stock is a stock that goes between two price points and may become predictable at times. Let's take a closer look. A channeling stock is a stock that moves between two price levels, a resistance level, or you could call it the upper price, and a support level, or what you could call the lower price. In this example, the resistance price is $10.25, and the support price is $7.80. The channel is the area between the support and resistant prices. The channel is the area between the support and the resistance prices. The area in between the higher price, called the resistance price, and the lower price, called the support price, is the area known as the channel. It is within this channel that one should plan on buying and selling. So now we know these basic concepts. First, resistance. The higher price of the stock where historically the price began to move back down. Second, we learned of support, the lower price of the stock where historically the price began to move back up. And then we learned about the channel, the area in between the high price and the low price of the stock. So you ask, how does one apply this theory? Great question. Let's take a look at an interview that our CEO, Timothy Thompson, did that explains the basics.
Time now for CEO FYI. And today we're pleased to have Tim Thompson of ChannelingStocks.com. How are you, Mr. Thompson?
I'm great. How are you, Jack?
Very well, thank you. Explain to us what your company does, please.
Channeling stocks, if you can picture in your mind a stock that would, say, go from a $8 price, say, to 12, back down to 8, up to 12. That area between the 8 and the 12 is what is known as the channel. What ChannelingStocks.com does is we locate those stocks for our customer base that are caught in a channel. The theory itself, again, if you can picture a stock that goes from 8 to 12, you'd buy it at 8, sell it at 12, buy it at 8, sell it at 12. Out of the 25,000 shares that trade actively, less than 1% actually are in a channel, so that really is the hardest part about this whole theory.
Tim, it's John Vince. How are you?
I'm great, John. How are you?
I'm doing great. What is actually the client profile? Who do you normally go after? Do you go after day traders or people that are long-term holders? Who's actually your client base?
Oh, that's a great question. Our client base, as we continue to grow and grow, is all across the board. The strategy itself, you have to understand, is not a new strategy. We got an email from somebody that signed up about a month ago that said he did this 40 years ago. It worked back then. So we're not reinventing the wheel here, but what we are doing is providing a service for those customers that, not to replace, we're not saying cash out your 401k and invest in this theory, but for anybody sitting on the sideline that's looking for an alternative investment strategy, that's what we're providing for them.
Sure. Is it entirely web-based and web-enabled, or do you have an offline methodology or maybe a newsletter that kind of goes along with the web-enabled site?
Well, currently we're strictly online, and we continue to look for better ways to service our customers. We have a retention rate right now of over 85% of our customers sign up with us again. And that, to us, is confirmation that the information we're providing is meeting the need at a value that they see is worth continuing with us. So
sure.
We're happy with that.
What is typically the methodology that you use in order to prospect, identify, and then possibly recommend a so-called channel stock?
Sure. we're going to be highlighted in Stocks and Commodities magazine this month, and we got a preview of the article, and it was funny because he wrote in there that when he first started talking to me on the phone, he was waiting for this holy grail, take to my grave, you're never going to know how we do this answer, but quite simply, all we do are look at charts. Again, with over 25,000 stocks actively trading out there, our team of researchers literally look stock chart after stock chart after stock chart for these patterns. We do have some built-in bases regarding at least 50,000 shares traded on the daily basis. We tend to stay away from penny stocks, though we have people that ask for them. And again, we try to fill the customer's needs. But every week we provide at least 12 new stocks in a channeling pattern. And again, the simple explanation is you look at charts. That's what we do.
Sure.
Tim Thompson, thank you very much. Continued good luck and good health.
Thank you very much, Jack.
ChannelingStocks.com, his company. Now it's time for...
Here is a 5-year chart of the symbol WERN. How many times could you have bought and sold just this one stock over and over again? Let's take a closer look at the numbers. The support is at $15 and the resistance $18. Let us add in the number of times one could have bought it at $15.50 and then sold it at $17.50. The red triangles are where you could have bought the stock, and the green triangles show where one could have sold it. There are 14 different times this stock could have been bought at $15.50 and sold at $17.50, a 12.9% return every time. Let's put the support and resistance lines back in. Using that as our guide, we chose $15.50 as our buy price. Why not $15? Why not buy at the support level? Because one of the most important aspects of this theory, confirming direction. What is confirming direction? Why is it so important? Confirming direction is waiting for the stock price to move back up off the support level and begin its move to the resistance level. Look at the chart below. How many times did the price go down to the support level of $15, but then kept on going down? Just because the price goes to the support level is no guarantee that it will go back up. Confirming direction means that you will not be buying it at the lowest possible price. If you did get it at the lowest possible price, it simply means you guessed right at that time. The next time you may not be so lucky. So back to the chart with the support and resistance lines. We see again that $15 was the support, and we just explained why we chose $15.50 as our buy price. We wanted the price to move up, also known as confirming direction. So why did we choose $17.50 as a sell price? Why not $18 or more? Our philosophy is simple. This is to take smaller gains over and over again.